All right, good evening, guys. Ken at Tortoise Capital Nightly Strategy Podcast for Saturday night, July 16th, 2022. So we'll be doing the swing trade reviews. The Friday night podcast kind of makes the argument for the potential for an upside move here in the short term. We saw the seeds of that last week this time when we saw the upturn here last week in all of the indexes and the market itself, which had been recovering from a excursion down to Z-1, and then was showing some evidence of recovery, and we actually saw that today in the strong close finally. The sell-off that happened earlier in the week was not large. It was orderly, small volatility, and then the strong finish going into the weekend put a nice ribbon on that one. So tech leading the way as it should. Finance is making a strong run right now. I just want to highlight to you symbol C. Citigroup had a really strong day on Friday to lead the finance sector, which led the market. The steel companies are suffering, but they're in a perfect posture for rebounds, having about a 60% sell-off from their swing highs. Energy is been slammed, but it's hard to see much more price relief on gas with geopolitics being what they are. So it's not surprising to see energy in the lowest position. This uptick doesn't mean it's getting better. It just means that it's not failing at the same rate that it was on this move from Z2 beyond Z3. It just means the pain and suffering is slowing down a little bit. In the battle between offense and defense, between conservative and growth, XLP, the staples, are doing a little better than the consumer discretionary. So this should have us looking for things like Home Depot, believe it or not, Tesla is XLY, sorry, Home Depot, Walmart, McDonald's, Coke. Those are the ones that are leading XLP higher. So that looks favorable for the intermediate term, the swing term. All right, into the trade frames. I personally find the Saturday night swing trade frames to be the most important things that we do because it sets the stage very efficiently for all the things that we're going to do this week. So I just want to commend the guys for posting these so we can talk about some good swing ideas here. I think these are important. Virgin Galactic has just been smashed, but we're starting to see like a 1, 2, 3 entry here. That's looks like a Godzilla on a weekly, if ever you saw one. And then on the daily, you see that reflected in a Kata 2, has turned to summer, is breaking out above the RL10 on this test. And the next target is 8, and then really 9 up in here. So that all looks good. Very strong close on Friday and testing that key price level. As soon as that breaks out, I think you can go. And I could see that with as little as a 20-cent risk intraday. I really like this one. Let's see who posted that one. Yeah. Nice. For a minute, I didn't think that was yours, Ken H, because it didn't have the boxes on it, but then I see it is yours. All right. The volatility has been declining. Daily ranges as well as the VXX. This is an area, though, of potential support in a short volatility spike here. So, we always got to be mindful of that. But it did close near these lows. That's why the risk Z has been favorable lately. I think in terms of like an insurance policy, if you just had a contingency buy to get it around 22 in case there's a spike, you'd be well suited for that. You'd be sorted out pretty well for that one. That's truly an intraday trade, though. Ethereum has been quietly getting it done here. The ETHE, this little base of 5 weeks has been established. That doesn't mean it's going to go, because after this little base was established, it failed. But this one has had a pretty strong week and closed well going into the close. And now there's this gap. There's no natural selling pressure inside here until it gets up really to about 12. So you're really looking at about a 33% reward just running back up. The COTA 2s on this one are amazing. And I think that the cryptos have been so bruised that ETHE is in a position where you can actually start thinking about swing trading this thing, if I'm being honest. Moderna responding well to the baseline. It made a nice run one time, 2 times to 180. There's a gap here. So if it does break out above here, it can get to 220. So on the daily, we would see that break out. And then it's a tactical trade to 180. And then if 180 breaks, is where I'd be looking at a second position. And that is a perfect zero state for a move in either direction on the 5 days. That almost looks like our standard fence sitter for swing trading, where it's like at the exact midpoint of a large move to support and resistance with a small risk box. And so you can get 1, 2, 3, 4, 1, 2, 3 to 1 in either direction. So you should be direction neutral on that one. Like it. The Qs have been leading the way on the slowly increasing strength this week. You like the lower, or the higher lows, I should say. We didn't get a higher high this week, but getting it to 300 is possible. So there's a $9 upside or $8 upside on this one to 300. And if that breaks out, then 315 or 320 is in range. So I'm liking that one. You like the COTA 2. We're maybe a day late on the COTA 2 here, but I still think with that room to 300, you have room to trade that with about $1 risk. The short side is easy to see. Already hit Ethereum and Spice. So I double opened those, sorry. Natural gas. Here's your COTA 2 forming. This is this little segment here is what we've been saying, that when you get sideways pressure, but no failing, like the RL10 never even flinched and just maintained that as that's actually a really strong sign. So we always want to be on the lookout for that. This thing has cleared resistance for sure. That's all of this. That's now a good base. And this is kind of the next target's 26. So that's plus $2 on a small risk. It's like a 25-cent risk. That looks good. Oil exploration. Finding a natural support, which on what was once resistance. Again, always noticing the kata twos. Once you start seeing kata twos, you can never unsee them. This is not a kata two. This is still problematic. So this is a one day at a time trade. It's got to break, say 122, then 130's in range. Breaks to the downside can be shorted with a view towards getting to 108, which is an $8 move on about a 50-cent risk. Yeah, that's good in both directions. Alcoa. This is why we love it. It has long, strong moves in both directions on every time frame. This feels like bottoming action in all the metals. So you're going to see that same pattern with Cliff, Nucor, US Steel, as well as Alcoa. This strong support, this failure to fail further. If it was going to fail here, it could have and come all the way down to 32, but it didn't. It held, had a nice recovery on Friday. But now, again, this is like a fence sitter. Strong resistance, strong support. This thing is postured right in the middle. That's why this is such a great intraday trader. Lord. All the metals were strong, so the signs are pointing up. Walmart, this is where that strength in XLP is coming from. You know, this after the harsh sell-off in XLP, which was surprising. The blue chips are surging, and here's your multiple kata twos, and now we are in the daily summer, and now it's cleared this. So you got one bar of pseudo resistance, and then the gap is all. There's no resistance whatsoever inside here. So there's a $20 move with hardly anybody that wants to get out of that position. Anybody that bought in here is loving this because they're seeing 150. And for a swing trade, I think that's good to go. You can play it as a day trade and try to get these little bursts. If you're day trading Walmart, you should be saving 20% of the gains to roll over into a longer term position. I mean, we're not going to rebuild America and the economy until Walmart is kind of back up here around 145 where it belongs. So there's still a 20% move left in that one. There's a tactical short available all the way back down to 125. So this is not just mindless buying. This is a zero state, but the upside is clear and the downside can get back into this pretty easily. So you have a nice fence sitter either direction. But longer term, I am liking it to the upside. McDonald's has been very volatile intraday. I mean, these large candles make this thing excellent for shorter term trading on 3s and 5s and 10-minute charts. It's at a natural resistance level here where it has failed 1-2 times already. That's these two moves. So you have to respect that move down to 247, then probably 240. So the downside is clear, but the upside can get to 262 pretty easily, which is about plus $7 on about $1 risk. So you got 7 to 1 in both directions. A great tactical trade. And it's not a meme stock, so you're not getting punked around by, the great unwashed. That one looks like a very orderly professional stock to trade. American Express, you see some of the resurgence in finance now being reflected in this little strong move here on Friday. It wasn't as strong as Citigroup, and so it has more room to recover back to 170. But that's failure to fail further right here, and it broke through the PSAR, and it's got to get through about 146. So that's a $4 move to the upside on about $1 of risk. You don't feel comfortable on this one until it gets above 147. Above 150 is free and clear. You should have 2 positions in by that time. And if it can get above there, this gap is no resistance. You got that 1-day resistance here and then another gap. So this could really go if finance has some juice. I would pair this one with, I'd probably have Citi, and then look at FAS and FAZ, the 3 times. That's the 3 times financial leveraged one. You could use XLF as a benchmark. So anytime XLF is greater than SPY, and if SPY is up, take the best of one of these 3. It would be AXP, C, or FAS. You could also, I suppose you could do JP Morgan or Goldman too, but Citigroup really had an extraordinary move. So I would pair those. Eli Lilly. This was not promising. That was that little bit of weakness there was not what we wanted to see after this nice support level here and a run up. We really wanted to see it do this and push up past 334, but it sold off. So that's not good. That's showing some signs of resistance. So that makes the short side on this one very easy to see because there's no support in here. There's nothing there. That acts like a gap. So if this fails at around 329, you have a nice tactical short on that one. And that could easily get you all the way back to 300 and still be part of this upward move. So if this just rolled over and held support and started to go, everybody would just look at that as, well, that's just normal backing and filling like it did here and like it did here. So the panic doesn't hit until it hits below 300. So you have a tactical short here. If it keeps going, you could just stay with it, but it doesn't test psychology until 300, right around in this region. Okay. And last but not, I think, did we already cover Moderna? Why do I think? I guess not. Yeah, I thought so. Yeah, this is what I should have said. I'm liking the double bottom and the potential for a breakout. This is a 0 state with a nice run to 180 or to 140, so critical state. I hope I said that. I should have. Perfectly postured right in the middle. Nice run up in either direction. You can see how it's an orderly move to the upside or a big sharp move to the downside, like it's done twice in the last 3 days. So you like that with about a $2 risk and about a $10 move in either direction. All right. That's everything we got. Tomorrow morning is the Creativity 202 course, lesson number 4. This is a good one. And we'll do the Euros tomorrow morning at 10, and then the US guys at 7 o'clock on Monday night in the Tortoise Room. And You can always sign up for that one. It's a self-paced course, even though we're having these weekly meetings. What we're really doing with these lessons is taking the lessons that we're on, going through them, and then coming up with a significant impact on our personal work in progress. So even if you're not on the specific lesson that we're doing, if you are doing a lesson, any lesson, and there's an insight or an impact on your work in progress, then you will benefit from that course. It establishes a nice weekly rhythm for true storytelling, which we're seeing it to be a very powerful tool. So enough about that. That's everything I got for you. And yeah, Ken H., I'm going to take that positive psychology course with you. Is that the one, if you signed up for that? I think that's going to be fun. Good baseline material there. All right, everybody, take good care, and we shall see you tomorrow or on Monday. Take good care.